Okay, can everybody hear us okay? You've got a chat box there on your right. Let us know if you can hear all of the audio loud and clear. We're about to get started. We'll get started in the next 2 minutes.
All right, guys, we're just waiting for the last few people to join the webinar, and then we're going to get started with today's LawPath webinar, which is why you should register a company in 2017. So just give it 20 more seconds for the last few people to join, and then we're going to get started. All right, let's kick things off today. So welcome everybody to one of LawPath's webinars. We've run a number of these webinars over the last year, and every single time they get more and more popular. So we want to keep it consistent, and every month or month and a half bring out a new topic that we see lots of questions coming into LawPath, and so we choose the topics from the most asked questions. And so the topic of today's webinar is why you should register a company in 2017. And I think this is a really important question right now because there can be a lot of complexities around registering a company. But before you even get to that point, it's really, really hard to know when you should actually register, at what time, and where should your business be, what stage of your business, where your revenue should be, what kind of risks you have associated with your business, and then to determine when you need to actually register. So today we're going to run through all of those questions, and I'll be giving you all of the answers. So just a little bit about myself. My name is Dominic Woolrych. I'm head of legal here at LawPath. I am a solicitor. I've worked both in the corporate and the criminal sectors. Also spent a lot of time overseas practicing law. However, for the last 3 years, my core focus has really been around advising startups and new businesses. And so I'm really well placed to run this webinar today and give you all some really good and solid answers about when you need to start a company. So a little bit about LawPath. Obviously, everyone on the webinar today is either a existing LawPath client or on the LawPath mailing list. So LawPath started about 3 years ago. We are a legal startup, and our goal is to provide legal services online to new businesses and small businesses. So our online platform allows you to create legal documents. It allows you to register companies. It also allows you to connect with our 700 lawyers on our marketplace. So all of the legal solutions that a small to medium business would need, all online within the one portal. As I mentioned, we're up to 700 lawyers now, so we have experts in all different areas of law, and you can request fixed price quotes from those lawyers on our website. We have over 30,000 users, so we've been growing very, very quickly, and I think one of the main reasons for that is that we do provide a lot of information for early stage businesses and new businesses, and we try and provide all that information for free. So it's really, really important that you're well educated on how to run your business from a legal perspective early on. And LawPath really strives to provide that information to you through things like this webinar. So far, since the company started, we estimate that we've saved small to medium businesses over $6 million in legal fees. What we really try and do is automate simple legal tasks so you don't need to spend lots of amounts on lawyers. You can spend that money on getting your business off the ground, on marketing, on advertising, and really getting some traction. So, as I mentioned, we really specialize in startups and small and medium businesses. Myself and our sales team, we speak to about 20 to 50 new businesses a day. And through talking with those businesses and advising them on their next steps, we learn a lot about the questions and the answers that they need. And so I've created this webinar today to really answer a lot of those questions. So the webinar is broken into three main sections. Firstly, I want to talk about the signs as to the time or when you are ready to register a company. So there are some signs that you will see within your business that really indicate that it's time to change structures. Secondly, I'll be touching on the benefits of company registration. There are plenty of legal and taxation benefits to becoming a company, and I'll run through those in a little bit more detail in the next few minutes. And then lastly, I really want to keep this presentation as practical as possible. And so I'll do a very, very quick demo on how to register a company. And most importantly, delve into a few of the issues around shareholders and directors and how you actually allocate shares to those shareholders, which is one of the traps for young players that we often see at LawPath, is that people know that they should be a company. People have told them, their accountant or their lawyer has told them that they need to, but actually how to do that cost effectively is often what people don't know. So by the end of this webinar today, you will be fully across how to take the actions to become a company. All right, so let's get into the substance. Firstly, signs that it's time to register a company. So as you would most likely know, if you've done some Googling or some reading around different business structures in Australia, there are three main types of structures. The first is a sole trader, and this is where there'd be one person that owns the business, and they would be directly responsible for any of the business and any of the revenue or risks flowing through that business. The second is a partnership, which is effectively two people that are responsible working together. And the third structure, and that's what we will be definitely focusing on today, is a company. Now, there are lots of different ways to explain how a company works or what a company looks like, but I think probably the high-level overview is that a company is a separate legal entity. It's almost worth thinking about a company as a completely separate person. So it's that separate legal entity that takes on the risk, that signs the contracts, that generates the revenue. So whereas a sole trader and a partner, the risks and the taxation flow directly through to you personally, as a company, you have limited liability so that it's a standalone entity. And lastly on this screen, I've put trusts up here. Often people get a little bit confused around how trusts work. And so I wanted to touch on that very quickly. So technically a trust isn't a business structure. It can be classed more as a relationship. So to actually own assets or own shares, the trust doesn't actually own those shares. What you will have is a trustee that owns those shares on behalf of a trust. So I think we get a lot of clients that come through and say, I'd like to set up a business and I'd like it to be a trust. What's really important to note is that you'll still be a sole trader, a partnership, or a company, but there will be a relationship there that involves somebody owning the shares on behalf of a trust. Now, if you'd like a little bit more information about this, because it is a very, very common question and topic that we get, we have a number of articles and blogs on our website that go into more detail. If you go to www.lawpath.com, you can go to our legal guides and blogs section. We have over 800 legal guides and blogs, and we've been writing these over the last 3 years in direct response to people's questions. So they're all very much in plain language, and they try and they do explain legal concepts in layman's terms. There is a section on there around starting a company, and there are plenty of articles about how trusts work. And I definitely recommend that you go and read a little bit more around that, because one of the questions that you will need to ask yourself when you are becoming a company is, will there be a trust involved? All right, on to the signs that you're ready to register a company. So often, a lot of you out there might have started a business. You might be working from home, you might have a side business, and I would guess that the majority of you would have started as a sole trader. You would have used your ABN, your personal ABN, which is the one you would have been issued by the tax office, and you'd be generating revenue as a sole trader. Now, you might have a salary that you're getting from your day job. One thing to note there is that your salary and the money that you receive from your side business will be flowing through your personal ABN. This might be the same case as a partnership. However, now, especially if you are generating any kind of revenue, it's time to become a company. So there's a couple of reasons why, if you are generating revenue, you should be a company. And the most important is actually on the tax side of things. If you are generating revenue and it is flowing through to your personal ABN, you're going to be taxed at a much higher personal rate. If you're registered as a company, there's a flat tax rate of 30%. So almost instantly, from changing from a sole trader to a company, you could potentially be saving yourself as much as 18.5% in tax. The highest marginal tax rate for a person can be 48.5%. The tax rate for a company is 30%, hence the huge savings in tax. So first thing, you need to look at the revenue that you're generating. You need to look at how that could be taxed. And if you are operating as a sole trader and generating revenue, it's time to become a company. The next is all around taking on risk. If you are taking on risk, it's really, really important that the company is taking on a risk and not you personally. Now, let me give you a couple of examples. For example, you started a new business and you are entering into a relationship with a supplier to offer services to that, entering into an agreement with a customer, to offer services to that customer. There are risks involved in that contract. If you don't deliver the services, they might be entitled to damages. Now, it's really, really important that it's a company entering into that agreement and not you personally. Because if you personally enter into that agreement, you could be personally liable for those damages. Whereas if it's the company entering into that agreement, it's the company that is liable for those damages. And as I mentioned, it is a separate legal entity, and therefore there is a buffer between the company and your personal responsibility. Now, that doesn't just go if you are entering into services with customers. That can also be around entering into contracts with your employees or with contractors. As you're most likely aware, it's really important that anybody that you're hiring in your business has a written employment agreement. That's actually the law, that they need a written employment agreement. Now, that employment agreement or that contractor agreement needs to be between the company and the employee, not you personally and that employee. For the very same reason that if you enter into that contract and there is risk involved in that employment contract, you want to make sure it's the company that has that risk and not you personally. Same goes for any kind of debt or loan agreements that you might be entering into. The loan is to the company. The loan and the agreement needs to be in the company's name, not yours. Now, I know that seems like I'm repeating myself a little bit, but it's really, really important that moving forward, if you are generating any revenue or taking on any risk, it is the company that is doing that and not you personally. And lastly, generating IP. I think this is often a really forgotten space that new businesses, they don't look at, and yet it is so, so important. Often as an early stage business or a startup, it's your idea that is the value. You don't have a bricks and mortar warehouse and a fleet of trucks and a fleet of employees. And so it is your idea that is so important to you and the intangible asset. And so it is really, really important that you protect that IP. Now, moving forward, as you build your business and form a company and even potentially go and seek investors, it's the company that must own that IP. Because it is a separate legal entity, it's the legal entity that owns the IP moving forward. Now, I'm going to touch on that a little bit later when I talk about the benefits, but it is really, really important that if you're generating revenue, taking on any risk, or generating any kind of IP, that you're under a company structure. So, section 2 of the presentation, benefits of registering a company. Now, this section is broken down into 5 areas, and I'm going to run through very quickly around why it is always advisable that you are a company structure over a sole trader or a partnership. Now, there is a small caveat on that. Sometimes a partnership is a better structure for certain types of business models, for example, lawyers and accountants. But the general rule is that a company is always going to be the preferred structure. So as I mentioned at the beginning, one of the largest legal benefits to being a company is that you have limited liability. So you're not personally responsible for anything that goes wrong. It is the company that is responsible. Now, you will be what's called a director of that company. And if you breach any of your director's duties, you could be held personally liable. However, that's in a very small amount of scenarios. And so there is a much larger buffer or safety buffer there if you're a company. Next point is around having multiple owners and having disputes. So I think one thing to note around a company is that a company is made up of shares. There can be 1 share in a company, there can be 1 million shares in a company. It is completely up to you. However, once a company is broken down into shares, it's really, really easy to have multiple owners in that company. If I have 2 people in the company, they could own 50 shares each and both be half responsible for that company. The other advantage around being a company and having shares is that if somebody wants to leave the company, they can easily sell their shares on to somebody else or sell their shares on to the person already in the company. And in the circumstance where somebody might pass away, the shares can be then shifted back or transferred back to the other partner or the company. So moving forward, it is really good that you are in a company structure if you have multiple owners in that company. And then especially around disputes. If there is a dispute in a company, often you will have what's called a shareholders agreement. A shareholders agreement is a document that stipulates the relationship between the shareholders of that company. It talks about things such as who can buy and sell shares, when you can buy and sell shares, but importantly, it talks about how disputes are settled and how decisions are made. Often in a shareholders agreement, it might say, for example, 75% of the shareholders can make a large decision of the company. So small decisions, the day-to-day running of the company could be made by one person actively involved in the company. However, any large decisions needs to be agreed upon by the majority of the shareholders. The next area that we'll talk about in terms of benefits of registering a company is risk and launching new products into the market. Now, as we see startups and new businesses come through LawPath, often cost is a real consideration. But what we do say is that it's really important before you launch your product into the market that you are a company. Once you launch, there is a lot of legal risk and liability there. If the product or the service that you're offering, something happens and it goes wrong, it's really important that you're a company structure and therefore have limited liability. So on a practical note, if you are out there and you've got a brand new idea and you're thinking, when is the right time? When is the right time to incorporate or start a company? You've been at the pub, you've had the idea with your friends, but maybe it's not time to go out on the Monday and incorporate the company straight away. But definitely before you launch the product, it's really important to be a company structure. All right, this is a really big one, and obviously it's really important that once you've created your product or your service, you've gone out to market, chances are you're going to need investors to scale that product and become the big successful company that you want. So seeking investors or capital into your business is going to be on your radar, maybe not right at the beginning, but it's definitely going to be there in the first few years. And one thing to note is that investors will only invest in a company structure. Now, there's two reasons for this. One, it's far more practical for them to invest in a company because, as I mentioned before, they can purchase shares, and shares make up the company, and hence they become a shareholder. For example, I have a new business. I'm 100% owner in that business. I incorporate that business and become a company. 1 year down the track, I want to sell 10% of my company for $100,000. It's as simple as then issuing 10 shares in my company to the person that wants to buy 10%, and it's very easy to bring on investors that way. The other reason is that you never know what's going to happen down the track in your company. It might be started by you, but as it becomes successful, they might bring in, or you might choose to bring in, a new CEO or somebody else to run the company, or you might have kids and decide to leave the company, or you might just choose a different path. And if the company is made up of shares, it is very easy to sell those shares to somebody else, to transfer those shares to somebody else, or bring new people into the business. So if you're looking for investors, or you think you're looking for investors in the future, you're going to need to be a company. That's really a deal breaker there. All right, I touched on this before, but if you're looking to hire any kind of employees, contractor, or consultants, which you will be in the very first area times in your business, it's really important that you are a company and you're signing those contracts as a company. So I think what we'll do now is we've had a couple of questions come through on the webinar. And so what I might do is just touch on a few of those very quickly. So I think the first question we'll look at is John. John asks, if owners hold IP, not the company, is this not better? John, really good question. And to tell you the truth, we get this question all the time. Moving forward, the company is going to need to own the IP. And I think it really touches on the point that we just spoke about, which was investors. When an investor comes into your company or looks to invest in your company, unfortunately, they're not investing in you. They're buying shares in a company, and they need to know that that moving forward, the success of the company is that it owns the IP, it owns the idea, it owns the processes. And so the company must own the IP. Let me give you some real life examples, just some examples we've dealt with in the last few weeks. It's often when you're going through the DD stage, the due diligence stage of an investment, the investor will come back, and it is usually the first or second question that they ask, which is, show me where the IP sits. And for startup businesses and new businesses that have forgotten to transfer the IP, they actually have to scramble around and get assignment of IP deeds signed so that it's all sitting within the company moving forward. So John, Look, I think you as a business owner, you would think, well, I want to hold on to that IP, but the reality is moving forward, it needs to be transferred over to the company. Now, don't get me wrong, you're not losing control of that IP at all. You will still be a director in the company and you will still be a shareholder in the company. So you own and control that company, but the IP sits in the company. Luke, really good question. And look, so the question from Luke is, what level of revenue makes it worthwhile to incorporate? And I think there is no one answer to this. I think from speaking from a purely a lawyer's perspective, as soon as you are generating any revenue, it would be legally wise to become a company. But we run a startup. We are practical about things. It's really this idea of cost versus risk. So to register a company in Australia will cost you roughly $700 to $800, and I'll touch on that a little bit later. But it's really going to come down to this cost versus risk analysis. So as soon as you can incorporate, if you're generating any revenue, you should do so. However, cost does play a factor there. So look, unfortunately, I can't give you a specific answer. There's not one magical dollar amount which ticks over. However, I will say that it's really going to come down to you and the cost versus risk analysis. One thing that I will touch on there, Luke, and your question brings it up, is once I register a company, the company will then have an ABN. And so any costs that I incur in that company can then be offset against the company. So there are some real tax implications and tax benefits to being a company as soon as possible. And I think probably also leads me on to my next question, which is, or my next topic, which I want to speak about, which isn't actually in the slides, but it does closely relate to tax, which is grants from the government. So the Australian government has, in the last few years, really upped the ante in terms of grants for small to medium businesses, and you'd be crazy not to try and capitalize on some of those grants. So the first one I want to touch on is the research and development grant. So if you are a new business and you especially are in the technology space, you can actually receive up to 48 cents in the dollar back for any type of research and development that you do on a new good or service. So if you are a new business and you are creating a new product and you are doing research and development in building that product, you can make a claim the following tax year and receive up to half the money that you spent on that back from the government. This is often a godsend to new businesses and new startups that spend a lot of money on development and coding. So there are a couple of parameters around this. And the first one is that you must spend over $20,000 in the year. So you are not eligible unless you've spent $20,000. But don't discount that if you are a small business now, because a lot can happen in 12 months and you may have spent up to $20,000 on research and development over the 12-month period. But you must be in a company structure to claim those costs. And so have a think about R&D, but just be wary that you must be a company to make any kind of claims. The next grant that I want to talk about very quickly is one that we've seen a lot of our clients take up or apply for recently. And this is the new government MVP grant. So minimal viable product grant. And I think this could be really appropriate for a lot of you very early stage businesses, because to be eligible for this grant, you need to be in the first 10% of your business concept or idea. So you actually don't need to have built anything yet. You just have to have had a really good idea and you have to be ready to build. The government will give you up to $25,000 to validate and build that idea. Now, this is a dollar for dollar grant. So if you spend $25 in the year, the government will also match that and give you $25,000. Now, this is a fantastic grant. It's been extremely popular. It's only brand new. It just came out at the end of 2016. It's run by Jobs, so the jobs area of the government, I definitely recommend Googling MVP grants and having a look to see if your new business or startup is eligible. But again, you will need to be in a company structure to be eligible for this. So now I want to get on to the practical element of the business or of the presentation, and that is actually how I go about registering a company. So all company registrations in Australia are done through the Australian Securities and Investment Commission. There is a government fee to becoming a company, which is $469. There's no getting around that fee. And so all companies must pay that fee to be established. However, there are a number of ways to register a company. I think the first way, and not the best way, is the old traditional way, which was going through a traditional accountant or a lawyer. This accountant or a lawyer would have a consultation with you. They would complete what's called a Form 201 or the ASIC form, and they would mail that into ASIC with the fees, and they would lodge the company for you. Now, we've got a lot of feedback from our clients over the last few years. We see the average price for that being about $1,200 to $1,500, and it usually takes around 2 weeks to be registered. Now, the new way to register companies, and by far the most efficient and cost-effective way, is to register a company online. You can complete a form online, and you can have that company registered within a couple of minutes. Now, there are about 20 companies in Australia that are registered to do this with ASIC, and LawPath is one of them. Funnily enough, that's obviously one of the reasons we wanted to run our webinar today, because we have a brand new ACM product or company registration product that we want to show everybody. Now, I think what I want to do now is actually get into some of the practicalities around registering a company, because the questions, and I know some of you in the webinar today have actually been on our forums, and you've had questions, and so you're listening today to get those. So let's jump right ahead to this example. So I'm sure all of you have been here, but this is the LawPath website. Always love telling people that we've helped over 30,000 Australian businesses make legal easy, and it's really you can look. My apologies. You can look down here and you can see all the different services that we provide. So as a lot of you have done, you can access legal documents on our website. You can connect to lawyers. But what I really want to show you is the register a company stage. And so what I'll bring up is our company form, because I'd love to actually run through it with you. So give me a moment here and I'll bring it up. Just as our loads, let me come into the form here. So when you're registering a company, the first thing that you will have to list for the government is the company name. And this company name can be whatever you choose. So obviously you can't choose one that's already been taken. And so you can very easily check the name by entering in the name in this field here. And what our system actually does is it will search the name for you. So you can see here that it's Dom's company, and I'm choosing my legal element, and it's checking the availability for that company right now. One of the other things to note is that you'll often see after a company name, Pty Ltd. You might also see Pty.Ltd or Proprietary Limited. The one thing to note is that these are all legally the same. It's really just a styling aspect. So however you want your company to read, that is what you would choose. There's no legal difference between those. So you can see now the system's gone to ASIC's database. It's checked for the company, and Dom's company is available to register, which is great if I was going to register my company today. Now, moving forward, you will complete the office address. So all companies are required to have a mailing address. This can't be a PO box. And so you'll need to put a mailing address there. Now, what we find is that 80% of the companies that are registered on LawPath, they actually use the home address. So there's no issue in using your home address as your registered office address. And you can always go through and change that address later on with ASIC. So a couple of other things that I want to talk about. So this form would take you about 10 minutes. You'll put in your details, you'll put in your address details, but there's a couple of other traps that I'd like to talk about. So what you will need to enter into the form is who are the directors of the company. Now, directors are people that control the company. So, the opposite of that is that shareholders are people that own the company. So when you are a small company, it's most likely that the shareholder and the director will be the same person. That's known as a sole director, sole shareholder, and they control and own the company. But as you get bigger and bigger, you often find that the people that are the directors in the company are not the same as the people that are shareholders. If you're a publicly listed company, they have thousands of shareholders. So they all own little shares in that company, but you might find that there's only a few directors that actually control the company. Now, the second area the second stage of registering a company is issuing shares to that company. Or to the shareholders in that company. Now, you can choose however many shares that you would like. I think it's really important to note that the most popular thing that we see people do on LawPath is register 100 shares at $1 each. Now, what this means is that there's 100 shares in the company. Each share is worth $1. That means the nominal value of the company is $100. Now, you might be thinking, my company's worth, or my business is worth so much more than $100. However, the nominal value is by no means the actual value of the company. To start off, you have a nominal value, and then as you grow, people would pay money, market rates for those shares, and then you would get the true value of the company. So starting off, I think this is the main question we get when people register companies is, how do I allocate the shares? I think you need to know it's completely up to you. You can have 1,000 shares at 10 cents each, 100 shares at $1 each, or one share at $1 each. But the most common thing to do is 100 shares at $1 each. Now, what I'm going to do is quickly touch on some of the questions that have been coming through. And so the first question is from Dang, and he has asked a question about GST. So he's talked about GST inside Australia and outside Australia. So let's give a very quick overview of GST, because you can see it's also 0.5 on the presentation there. So GST, goods and services tax. You must be registered for GST as an Australian company if your revenue is over $75,000. Now, there are also some exemptions there. If you are a taxi driver or an Uber driver, you need to be registered for GST no matter how big your revenue is. But for most other companies, you need to be registered for GST if you're over $75,000. Now, that is for Australian companies. Now, Dang's question was, what if you are outside of Australia? If you are an Australian company, you need to be registered for GST. If you are a company from outside Australia charging customers in Australia, you don't need to charge GST. However, you do need to get legal advice on there. There have been a lot of cases recently, especially around Airbnb, especially around these new marketplaces where they are registered in Ireland or they're registered in America and they're not charging GST. And what we have found is the government and the ATO have made rulings forcing them to charge GST. So definitely worth getting some advice on there. Move on to the next question, which is from Ben, which is a really great question. We get it all the time. It's, should I register a business name as well as a company name? So Ben, if you register a company name and you intend to trade with that company name, you do not need to register a business name. However, if you register a company name and you intend to use another name out in the market, you do need to register for a business name. Now, there's a really fantastic article on our blog that explains this and gives a lot of examples. And I think if you read that, you'll be able to definitely relate to one of the examples. So jump on our LawPath legal blog and search for business name or register business name, and that article will come up. John, you've talked about your next question is from John, everybody, and he's talked about pricing, and I'm going to get to that in a moment. And then lastly, we've got a question from Kimberly, which is, and this is more of a personal question from Kimberly, which is, I own 3 small businesses. Well done. You have them all under the one ABN. They all have different names. How would I structure when I become incorporated? Really, really good question, Kimberly. And a lot of people have lots of different ideas and businesses under the one ABN. There's 2 ways to do it. The first is that you could incorporate one overarching company and run the 3 businesses under that one company. The second would be to create 3 separate companies. And I think it's really going to come back to this question of cost versus risk. Maybe when you're starting up, you don't have thousands of dollars to set up 3 different companies. So it's best for you to start one overarching company and run the 3 businesses and business names under that company. But it's definitely advisable to move away from your personal ABN, because any revenue generated from those 3 businesses currently and any tax that eventuates from that revenue will be flowing through to you personally. So those are those questions. So very quickly, I want to touch on one area, and that's what happens after a company. Actually, look, let's touch on Luke. Luke's got a follow-up question that I think I might talk about right now. And this is around purchasing real estate as a company or a trust. Yes, it's very much advisable that if you are looking to purchase an investment property or real estate, that you do it through a trust and corporate trustee structure. Often you will use what's called a unit trust and have a corporate trustee as well. I definitely recommend that you speak to an advisor, a lawyer or an accountant on this, and set up the structure correctly, because the tax implications can be huge. So you are right. It's much better to operate through a trust and a company structure. However, set that up with a lawyer at the beginning, and the tax implications down the track, especially around capital gains tax, will be much better. We always try and save as much money for businesses early on here at LawPath, but when it comes to purchasing huge assets such as investment properties or your own house, it's really important to get advice early on. So I think we've spoken about now why you would register a company, the benefits of registering a company. We've also spoken about practically how you can do it on the LawPath website. But I want to talk about a little bit about what happens after you register a company. So you have filled out the form on LawPath. We have then collected all that data. We have submitted that data to the government for you. We have registered your company name, and we have received what's called an ACN, an Australian company number. Once that's sent back to us, our system then creates a number of documents that you need for your company. I'm going to run through those documents right now. So under the Australian corporations law, you are required to have a number of these documents. The great thing is, as part of the LawPath service, we automatically generate them all for you. So the first thing is a company certificate. That's what I just mentioned, that comes from ASIC. The second one is a constitution. This is a document that stipulates the rules between the company and the shareholders, not to be confused with a shareholders agreement, which deals with the relationship between different shareholders. So constitution sets out all the rules around the company. We will also draft you all the share certificates that you need. So if you have multiple people in a company, you actually give them a document that says you own 10 shares in this company, and the LawPath software will create all of those for you. We'll also give you a number of blank share certificates. So in the future, if you want to have investors in your business, you can issue them with share certificates as well. There's a number of different journals and ledgers that we will create for you and fill out for you that you'll need for your company. And we'll also create all of the documents you need for your directors. And as I mentioned, directors are the people that control the company. So you can see there's a whole suite of documents 13 documents all up that the LawPath software will draft for you, and create for you and deliver to you. Now, the great thing about the LawPath platform is that all your documents are all delivered into your LawPath account, and so they're all stored in our online vault for future reference. So you never lose those documents. We've got them for you. And once you've created your LawPath account through incorporating a company, you can also access documents such as shareholders agreements or IP assignment agreements or partnership agreements. So let's touch on some of those documents really, really quickly. So if you have more than 2 shareholders in a company, it's definitely advisable to have a shareholders agreement. What I would suggest is incorporating a company through LawPath. One of our packages, and the package that we will talk about today, actually includes all of these documents and over 200 other documents that you can create through LawPath. So if you have more than 2 shareholders, first step will be to create a shareholders agreement. Secondly, as mentioned, it's time to assign all the IP to the company. You would create what's called an assignment of IP deed for everybody that's created IP whilst you were a sole trader, and assign that over to the company. We've already mentioned all the incorporation documents that we will automatically generate for you. They'll all be stored in your account. And then moving forward, you will need a couple of other registrations to set up your business, to set up the company. As a company, you'll need a new ABN. This is not to be confused with the personal ABN that you already have. You need a new ABN for each company. The Australian Tax Office requires each legal entity to have its own ABN, and as a company is a separate legal entity, it'll need its own. Same goes for a tax file number. You will have your own personal tax file number. However, you must have a company tax file number as well. And as I mentioned before, if you have revenues over $75,000, you will be required to register for GST. Now, the great thing is once you have all these registrations done, you can go and open a bank account. You will need to show the bank your ABN and a number of your incorporation documents to open that bank account. But once open, you can start accepting and generating revenue through there. So now we get to the special offer that we've got to get today. And it also is going to answer John's question, which was, how much is a company incorporation or a company registration? So today we have a really great offer, and we're the only company in Australia that can offer these type of things. And that is, let me tell you what that includes. So our company starter package, which is $839, it includes all of the following: the company registration done through the LawPath platform. It includes ABN registration with the Australian Tax Office. It includes GST, TFN, and PAYG registration. Just to touch on PAYG, if you have any employees, you will need to register for this. It includes the 13 legal documents, such as constitution and share certificates. It also includes a LawPath consultant to help you through your application. So if you do get stuck on any of those difficult questions, especially around share allocations, you've got your own personal LawPath consultant that can help you. And it includes access to the LawPath platform. As I mentioned, over 200 legal documents, such as employee and contractor agreements, website terms and conditions, privacy policies, shareholders agreements, any type of legal agreement that you can think of, this package includes. And today, for people on the webinar, we're doing an exclusive offer. For the price, for the company starter price of $839, you get 12 months unlimited access to the LawPath platform. Now, this usually costs $1,019, so you're saving $180 today if you move forward with the company starter pack. Really, it's going to give you everything you need to start and run your company, all from the one LawPath platform. So we'll do the company registration for you from our seat. We'll speak to ATO, get your GST, TFN, and PAYG done. We'll speak to the ATO and get your ABN done. We'll draft all the documents that you need for your new company. And then moving forward for the next 12 months, you'll have access to all of the legal documents you need terms and conditions, shareholders agreements, IP assignment agreements, employment agreements, contractor agreements. And don't forget that LawPath, the LawPath platform, it doesn't just have legal documents on it. It also has over 700 lawyers on there that you can seek advice from. There's a marketplace there that you can compare quotes. It also has over 800 legal guides that you can call upon. And it also comes with premium support from our LawPath consultants. So as I mentioned before, we speak to 20 to 50 brand new businesses and startups each day. We love helping them through the early stages of their business. And by choosing the company starter pack, you'll have access to those LawPath consultants for a full year. So from a legal perspective, you're really covered. Going out to a traditional law firm to get all this set up, it would cost in excess of $6,000. Today, we can do it for $839. Using our technology, using our automation, we can get this sorted for you within 24 hours. So you'll be up and running, set up as a company, up and ready to go within 24 hours. And then you'll have this exciting 12-month subscription moving forward for all of your legal needs. So really don't miss this opportunity today, guys. There is huge value in this package. As I said, we're the only ones in Australia that offer this type of service. So become a company and receive all the legal solutions you need through the LawPath platform. Now, we've got about 5 minutes left on the webinar. If there's any last minute questions, we can definitely cover those. But don't worry, if you have any follow-up questions, what I'd love you to do is to jump on the LawPath website and go to our chat. In the right-hand corner down the bottom of our website, we have a chat function. You can see it right here on the page. I'm going to click on it now. There we go. It opens up. This connects directly to our LawPath consultants. You see Matthew is on there right now. He can answer any questions that you might have. Any follow-up questions around the company starter package and the special discount that we're doing exclusively for webinar customers, we can answer those for you. But definitely jump on this as soon as possible before the end of 2017. If you're a webinar customer, this is valid until the 26th of May. This link here, definitely copy this, try.lawpath.com.au/register-company-webinar. If you are on the webinar today, you're going to save $180 by using this link and registering your company here. So as I said, any follow-up questions about the presentation today or the special that we're doing today, please jump on the chat. And that being said, any other legal questions that you might have, we are really, really happy to hear them and answer them for you. We get all sorts of questions from new businesses every day. And if we can point you in the right direction to some free information, we love doing that. Or if we can't find free information for you, we'll definitely connect you to one of our lawyers for some legal advice. All right, guys, I'm going to leave it there today. As I said, please follow up with any questions you might have, but definitely jump on this offer today. You're saving $180. Company starter package includes everything you need to become a company right now, plus 12 months subscription to LawPath. So moving forward, you've got all the legal solutions you need for bringing on employees, for raising capital, for entering into consumer or supplier contracts, and especially shareholders agreements if there's more than 2 of you in the company. All right, guys, thanks very much for joining us today. Really enjoyed our time together. Thank you for all the great questions. I know lots more questions were answered by my colleague, Tom and Zach. So thanks again for your time, and keep an eye out for the next LawPath webinar that we'll be running in about a month's time.